the United States, we don't have things like public health care and education. We don't have, the ability, our citizens don't have the ability to speak languages besides American for the most part. We don't have things like safety from school shootings and other fucking luxury things like that. What we do have is, of course, an undefeated record in Super Bowls, World Series, NBA championships, world wars, all the important things like that. We got shit tons of freedom. Ever fucking heard of it? And what we have even more than freedom is money. What's up, apes? Welcome back to another edition of the 𝗙𝗟𝗡𝗚's daily podcast of the day. Thank you all so much for joining us here once again on this beautiful Tuesday, October 22nd, 2024. It's currently 6:21 p.m. in the evening here, and we got a lot to talk about here today. We do have some breaking news to report as well. It turns out that ripping cigs is still cool as fuck. I mean, Ronald Reagan said it best, right? Drunk cigs don't count. Meanwhile, it turns out that not bombing people in villages is actually not cool, at least according to Mr. Market, and we'll explain exactly what we mean by that in a couple of minutes. Before we get into that stuff, though, let's go ahead and do a little bit of a market recap. The WSO Alpha portfolio was trying to give me a heart attack yesterday, trying to make me cry myself to sleep, but we'll be resilient, we'll be strong. We were down 13 basis points on this session here, while the S&P 500 was down only 5 basis points for the session. Now, Microsoft had a particularly good day. We do hold Microsoft within the alpha portfolio, but that didn't give us any alpha against the S&P 500, against the NASDAQ, or really anything else. What really kind of weighed against us was a tough performance from firms like Zillow, Builders First Stores had a pretty tough day, Airbnb, pretty much anything housing related had a rough day. I think that's related to the conversation of the Fed potentially skipping a subsequent rate cut at the December meeting. They're definitely not going to in November. I think that would end the S&P 500, probably the entirety of America, if the Fed decided not to cut in November. But it seems like some, central bank version of buy curiousness as it relates to what they're going to do with interest rates in December is kind of spooking anything that's linked to interest rates, and you don't get any more linked to interest rates than within the housing market, at least within U.S. equities. Okay, let's go ahead and move into some of these banana bits of the day. This first one, god damn, I've been waiting so long to talk about this. I absolutely cannot wait for this to happen. I'm going to be tuned in the second that it gets released, but Donald Trump has officially confirmed that he's going to be going on the Joe Rogan Experience, the second largest podcast in the world behind the 𝗙𝗟𝗡𝗚's daily podcast of the day, obviously. But the Joe Rogan Experience is going to host the former president on Friday. I don't know if the episode is going to be released on Friday, but according to reports from Politico, that is when Trump Daddy is at least scheduled to head to Austin and record with Rogan. Now, I think if Rogan wanted to be smart about this, they would at least, his problem with Trump, and the reason why he hasn't wanted to interview him in the past is because he says, quote unquote, I don't want to help him. He doesn't want his massive platform of 14 million or so listeners to actually be influential for the election in favor of Donald Trump. And, he's just worried about, it's understandable concerns. I would be, when Trump requested to come on the 𝗙𝗟𝗡𝗚's daily podcast of the day, I said, hey, probably not, man. We're, pretty large and influential. We don't necessarily want to be skewing things on our own. So what the smart way to go about this would be, if Rogan really wants to kind of hold that up, would be to record sessions with both Trump and Harris and then release them at the exact same time. Now, on the Spotify feed, one would be on top of the other, so I guess they would have to figure out exactly how they could do that in the most equitable way, but still, that would be the best way to do it. Record the podcast with both of them, bank them until you have both recorded, and then drop them at the same time. Make them, have similar conversations, and be just as challenging on questions, go, a similar length ideally, shit like that. But oh my god, I absolutely cannot wait. Harris has kind of come out and said that she wants to go on the Joe Rogan Experience, or she wants to go on the platform. I'm sure Rogan would have her on there if he's going to have Trump, but this hasn't yet been confirmed, so expect that to get confirmed in the next couple of days. Okay. Moving on down into our next banana bit of the day, we have Starbucks reporting earnings after hours here. Shares were down 3% last I looked. Sales were down 3%. The stock is down way more than 3% last I looked. Let me go ahead and double check on exactly how far down it is now. Yep, down 4.23% after hours. Sales once again down 3% to $9.1 billion. So a rough quarter for Starbucks. Now, McDonald's shares were also down. Now, surprisingly, this had nothing to do with the potential change from McDonald's to just Donald after Trump was out there serving burgers and fries to anybody. Turns out that there is a case of E. coli going around in the quarter pounder, so obviously that's going to spook investors and hopefully more so spook customers. Meanwhile, Anthropic, this is basically Amazon's version of OpenAI. They don't completely own this like Microsoft does, but they do have heavy investments in it. Anthropic released a line of AI agents yesterday that can, quote, use computers in basically the same way we do and follow step-by-step instructions, even if there are tens or hundreds of steps, at least according to the CEO. Basically, that means that Anthropic is coming to steal your job as we speak. Meanwhile, Sherwin-Williams, this is a paint and paint-related products like fucking coating and like shit like that. They came out and reported earnings, and the CEO made the fucking stupid decision of saying that they were expecting, quote, demand choppiness in the next quarter. Obviously, markets fucking tanked the stock after that. So it was a rough day for Sherwin-Williams and once again, pretty much all housing stocks. Finally, Goldman Sachs is officially, Goldman Sachs is officially facing a probe from the CFPB, or the Consumer Financial Protection Bureau, over the Apple credit card that it issued. So Goldman and Apple a couple of years ago released a credit card together, and apparently there were problems with it. So the CFPB is now probing them. Hopefully all goes well over there. Hopefully they don't dig too deep where they find actual gold in that probe. You know what I mean? Anyway, let's go ahead and move into our major macro monkey story of the day. We're talking about the fact that, guys, the grass ain't always greener. You know, we like to pretend that it certainly is. I mean, this fucking green screen behind me sure as hell is green as fuck. It's probably not green when you're seeing this, but it is when I'm recording this. So, bit of a breaking the fourth wall for you guys right there. But The Economist came out yesterday and apparently learned the same lesson that their mother country, the UK, learned back in 1776, and that is that America fucking kicks ass. Now, we talk about this all the time, but today we're actually going to put numbers to it and talk about actual facts of the matter rather than just pure conjecture and American patriotism. So, the United States, we don't have things like public health care and education. We don't have, the ability, our citizens don't have the ability to speak languages besides American for the most part. We don't have things like safety from school shootings and other fucking luxury things like that. What we do have is, of course, an undefeated record in Super Bowls, World Series, NBA championships, world wars, all the important things like that. We got shit tons of freedom. Ever fucking heard of it? And what we have even more than freedom is money. So that's really kind of the trade-off here. The United States is much more individualistic with that, and we'll talk about exactly why that is in just a little bit. But the reason that we're focusing on this today is because Americans just can't stop complaining about the state of the economy. I mean, today, finding an American that's happy with the state of the economy is like, I'm actually not even going to say the analogy that I was just thinking of right there, but still, it's basically impossible to find. It's like finding a damn unicorn is finding an American who's actually pleased with the performance of the economy so far. So let's go ahead and talk about how unfucked the U.S. economy is compared to the rest of the world, because if we're going to complain about the U.S., if the U.S. is going down the shitter, if the economy's falling apart and, the American empire is done, then the rest of the world has been done for at least a century, is completely fucked. So let's go ahead and talk about and dive into exactly what the Economist was talking about. So they did the Lord's work. They put together an entire section of the news on the newspaper's website. It's not just one report. It's multiple links to different reports talking about how sick America is. So obviously I was fucking creaming myself reading that shit here today. But they went ahead and just described exactly how roided up and jacked the U.S. economy is. So the first thing that we want to note here is GDP. Now, U.S. GDP, we've spent a lot of time recently talking about this stuff, but we're not just going to talk about its absolute size. We're going to talk about it relative to the entire world and relative to the G7 countries. Now, G7 countries, before we get into it, we should state, is the group of 7 nations. This was, I think, post-World War II, these were like the 7 largest economies in the world. Let me see if I can name them off the top of my head. Pretty sure it's the US, UK, Canada, Italy, France, Germany, and Japan, I want to say. I believe that's what it is. If I got that right, that was pure off the top, so just know that right there. But, so, if we go ahead and look back into ancient times, in the olden days, like 1990, the United States, as a percentage of the G7 total GDP, the United States made up roughly 40% of that or so. Again, that was about 35 years ago. Today, it's over 50% in both nominal and real terms, in purchasing power parity and prevailing currency exchange rates. The United States GDP is closer to 60% at the market exchange rate side. So that means that the United States economy has consistently outperformed the rest of the G7 over the past 35 years, and according to the analysis done by The Economist, it's only gotten more extreme since COVID. Now, compared to the rest of the world, the U.S. economy in purchasing power parity terms has fallen from about 20% down to about 14 or so percent. And I think we know exactly who's to blame for that. Shout out to China, because this again that one actually goes back to 1980. But at market exchange rates, it's been roughly the same, somewhere around 25, 28% or so. So once again, the United States absolutely outperforming the rest of the GDP, the rest of the G7 in terms of GDP growth. So that was the biggest thing that they noted. And then, of course, we want to talk about exactly why that is. Well, real GDP in the United States is up 10% since early 2020. The average of our fellow G7 nations is closer to about 3.2%. So the United States is roughly triple the average for the rest of these G7 countries. One of the biggest reasons for that is labor productivity. So this is probably the biggest difference maker right here. So when we talk about labor productivity, you're essentially talking about output for input. It's the ratio of output you get based on the amount of input that you're going to be putting in. And so the more output that you're going to get per unit of input, the more productive you're going to be. So the United States, much more productive on a per unit basis, as it would obviously be. But when we talk about this stuff, it sometimes gets a little bit bogged down. I didn't even know this, but apparently when our European friends aren't busy fucking napping or taking sick days or whatever the hell else goes on over there, they're bullying us. They bully Americans for having less holidays, or as we say in American, less vacation days, thus making us seem more productive on an annual basis. Because we take less days off and we have more output on an annual basis, that makes the United States seem a little bit more productive. But the economists went ahead and they nipped that in the bud. They said, let's go ahead and talk about productivity on an hourly basis. So we're talking about the same amount of inputs per hour, and what is your output based on that? I realize that these are very vague terms and very generalized, but it has to be in order to, get this across. So if we look at this, since 1990, American per hour productivity is up about 73%. Pretty good numbers. It's about 55% in the UK, 55% in Japan, and a disgusting, miserable, embarrassing 39% in the Eurozone. So that's going to be one of the biggest difference makers, is that over the past 35 years, American workers have become much more productive than those in the rest of the world. A big reason for this is because the US spends more than any other country does on research and development as a percentage of GDP. That's both public and private R&D expenditure. It's at about 3.5%. The next closest is China, and I'm blanking on exactly where they were, but it wasn't even close. It wasn't within 1 percentage point. So this was another big reason for it. But then another big reason for it, one of the other big drivers of US GDP outperformance, comes down to exactly what I was ranting about yesterday, and that is, of course, energy. So the United States does something called drilling. Now, you might have heard one of our presidential candidates talking about drill, baby, drill, but this has actually been going on for almost the past century at this point. So since 1950, the U.S. economy has effectively tripled its energy production, just about tripled its energy production from a little bit less than 40 exajoules to currently about 110 exajoules on an annual basis. So at the same time, throughout most of Americans' history, at least up until, the 1960s, about the mid-1960s or so, we were producing less energy than we consumed. Now we're actually producing more energy than we consume. So you could say that the United States is energy independent, but that would be inaccurate, because energy independent means that we are using all of the energy that we produce. And so that is, that's energy independence refers to not taking energy from any other countries. It's that you're only using your domestic supply and you don't rely on energy imports from anywhere else. The United States doesn't do that. It's a lot more complicated on the global trade side of things. I don't know exactly why it is, but we export a lot of this, so we do import quite a bit. So the United States isn't necessarily energy independent, but we are what we call energy secure. And that's, again, because we produce more than we consume, so we can go ahead and stop exporting any time if need be. So we're kind of secure in our energy supplies here in the United States. Now, a big reason for this is because we don't give a fuck about the goddamn environment, and I absolutely love it. So the big reason for it was because of the shale revolution that happened really began in the mid-2000s, kind of took off in the early 2010s, and that's really what's seen the explosion in productivity. Now, this has actually gone from roughly 65 exajoules to the current 110 since about 2008 or so. So this is one of the big things. Increase energy production. What's that going to do? Increase your supply. And what does that do? Lower energy costs. And that's exactly what we were talking about yesterday, the importance of low energy costs. So what does that mean? Well, it allows you to take on more risk on investments because you, again, have a lower hurdle rate. Energy is more abundant. It's less costly to actually go out and gather for yourself. So that allows you to do more risk on things, and not even just more risk on it. It allows you to do more things when the availability of energy is going to be more prevalent or easier to access there. So energy production and productivity expansion are the big reasons for this. What, of course, does this feed into? Well, the meaning of life itself, the true reason for being a human being, and the way to achieve human happiness, the way to achieve eudaimonia, as Aristotle would say, or was that Socrates? My brother would be so disappointed in me. But the number one thing, the reason that we're all walking the earth, creating shareholder value. That's what this does more so than anything. And so we can see that in the percentage of total market capitalization of the global world. So the global world, Jesus Christ. What we're talking about here is the percentage of market cap that's made up of US stocks. So if we take the entire market cap of every company in the entire globe, what percentage of those are American domiciled companies? See, I can put a sentence together once in a while. So the United States completely dominates in this. We're back to more than 50% of global market capitalization. So back in the early 1900s, right, post World War I, we were roughly 25% or so. And then by 1970, we were at closer to, 70-ish%. Then by 1985, we're closer back down to 25% because Japan had a fucking run like no other country has ever seen before. Then since then, we've slowly climbed back up to a little bit over 50%, probably at about 58% or so, but I can't see the exact lines on this chart. So once again, this expansion in labor productivity and the subsequent addition of, the extreme supply of energy that the United States has compared to other G7 nations and most other countries in the world contributes to that excess GDP growth and feeds into excess market capitalization because our stocks are doing so much better. Specifically in the 19th century, according to the fucking nerds that the economists spoke to for this stuff, the United States stock market averaged a real return of about 7% per year during the 20th century, whereas the rest of the world was about 4.9%. So might not be a big difference on an annual basis, but over the course of 100 years, 2.1% difference is going to amount to trillions of dollars in compounded interest. And once again, this is a big reason why you see the discrepancies in wealth in the United States versus other G7 countries, and especially versus the rest of the world. So don't get me wrong, there is plenty reason to complain in the United States. Just look at our fucking presidential candidates, for Christ's sakes. But the basic principle that's separating the US economy here is just that idea of risk-taking. So willingness to take on more risk on both an individual and a societal basis, high risk, high reward, but also worse losses. And that's kind of the deal that we've struck for ourselves here in the United States. And that kind of makes sense on an intuitive basis as well. I mean, the United States was formed by people from all of these different countries, kicking the fucking Native Americans off the land, manifesting our destiny, if you will. So the people that founded the United States, especially, the earlier back you go, the more true that this is going to be. But the United States was founded by people who were fucking psychotic enough to hop on a boat before, most of the time before aluminum was discovered or steel was invented, and ride it across the goddamn ocean. Like, you're in a wooden ship riding from some shithole in England over to the United States, the glory and beauty of the United States. And so that takes a lot of balls, it takes a lot of risk on behavior, and that's something that's fed through generations. Now, you could make an argument that it's definitely not the case for millennials and Gen Z, but I would argue that there hasn't been enough time to play out to actually make that determination just yet. But again, that is the big difference. The US economy is on top, and the grass ain't always greener, no matter how much we want to complain. Okay, let's go ahead and move into some of the big stock movers of the day. We're starting out with what's right. First and foremost, Philip Morris International. Anybody smoking Marb Reds out there? If you are, you definitely helped out Philip Morris's balance sheet. The company was up 10.47% on the session after reporting a hell of a strong quarter. In the third quarter of this year, the company delivered $1.91 per share in earnings on $9.91 billion in sales. Both of those completely smoked estimates. Shipment volumes were up 2.9%, revenue was up 8.4%, suggesting good pricing power, even though inflation is starting to fade a little bit. Now, organic revenue grew 16.8% in the smoke-free unit. That was the biggest contributor to revenue growth and also the biggest contributor to earnings growth, as operating income on an organic basis grew 20.2%. Thanks to increased shipments of Zyn and IQOS. IQOS? I don't know how to pronounce this at all. I don't even know what the product is, to be honest with you. I know it's a heated tobacco unit, but I do not know exactly what that means. Meanwhile, Zyn completely dominating the market. It's understandable why. Now, down in North Carolina, you can get these bad boys wintergreen Zyn, whereas up here in fucking communist Massachusetts, all you can get is this flavorless Zyn. So this is chill right here. I think this is a constitutional violation. I'm going to take it up to the Supreme Court. So if anybody is on board, let me know and we can come file a class action lawsuit. But once again, I can confirm that ripping cigs is cool as fuck, according to Philip Morris's Q3 earnings. Okay. Moving on down into our next right mover of the day, we have General Motors. This stock was up 9.85% for the session. So it turns out that if you don't copyright material from a sci-fi movie, you can actually have a pretty good quarter. You can still manage to put together a pretty good quarter. That's exactly what GM did. without copywriting or without stealing copyrighted material from Blade Runner like Tesla pretty blatantly did, if you ask me, during that WeRobot event. But GM, back to the point of what we're talking about here. The company dropped its earnings report. They reported $2.96 per share on $48.8 billion in sales. Estimates have them pegged at $2.43 per share on $44.6 billion in total revenue. This caused the company to really hit the gas on guidance, adding $1 billion to its full year EBIT expectation. So that got investors really hyped up. There's really that increase to guidance that kind of helped out. So driving the results, the company showed very strong price controls. Now its average transaction price came in at $49,000, very historically high. So that helped out quite a bit, pushing revenue up 10.5% compared to last year. GM CFO even came out here and stated something that's very positive for the US economy as a whole. He said, "The consumer has held up remarkably well for us. And if the consumer is holding up well in terms of auto purchases, you can probably assume that the consumer is holding up well across the board because that's the biggest purchase that most consumers are going to make besides a house. And it's very linked to interest rates. So that would be a good sign for the economy." Okay, moving on down into our stinky, rotten movers of the day. Lockheed Martin. Great American company, one that we're all proud to go and die on a foreign battlefield for. The stock was down 6.17% on the day. Investors were extremely disappointed because the company failed to bomb nearly enough villages in the Middle East and in Ukraine and all over the place. So very disappointing that they didn't kill enough people last quarter. Revenue grew just 1% year over year to just $17.1 billion. They missed estimates for $17.4 billion, despite a distinct increase in the odds of World War III occurring any time. Net income of $1.6 billion actually fell 5.8% from $1.7 billion last year. One of the biggest drivers was weak sales of F-35 jets. Now, these things are done, it's not like the United States government is constantly purchasing more and more F-35s, although that's certainly what it seems with our defense budget. But these things are usually planned out a little bit more in advance and saying like, all right, we're going to buy 10 of these things in 2027, and they kind of plan it around like that. We do ship these things to some of our allies, but clearly not enough to satisfy Lockheed Martin investors. Thankfully, though, don't worry, HIMARS and other air defense systems and missiles were doing pretty damn well for the quarter. So, Jesus Christ, whatever. Let's go on to our next stop. Verizon, already the most hated company in America. They spent Q3 leaking customer data to the CCP. So shout out to Verizon, another great American company we're all proud of. God fucking damn it. The stock is down 5.03% on the session because of shitty earnings. So investors sold off because of these Q3 numbers. They really weren't terrible, but they were pretty bad. The company beat on EPS on the bottom line by reporting $1.19 per share against estimates for $1.18 per share. Revenue of $33.3 billion came in just shy of the $33.4 billion that was anticipated. Now, most of this was due to a weak performance in Verizon's wireless hardware unit, but they still did have pretty good performance in broadband and among postpaid accounts. And broadband is arguably the only area for growth for this company. So seeing that it was able to expand customers at about 239 million instead of, or I think they added 239,000 in the quarter instead of 221,000 like the street was pricing for. So broadband, internet connectivity, that's really going to be the growth area for companies in this sector. Think, Comcast, think AT&T, all of those players. So seeing them perform pretty well on that is beneficial for the stock, but investors were seemed a little bit more pissed by the revenue miss for the quarter. Could be a buying opportunity if you want to get in on one of the lowest growth sectors in the entire economy. All right. Moving on down into our thought banana of the day. Thank God, because I think I'm going to run out of breath and throw up all over myself here relatively soon. But we were talking about how tunnels are boring. Tunnels are just flat out fucking boring. And what really made me come to this conclusion was I was writing and I realized I had gone a whole 5 seconds without typing Elon Musk. And so I figured I have to solve this. And the only way to do it is to spend the entirety of the Thought Banana section talking about him, or at least more specifically, one of his favorite children. Now, if we were going to rank order Musk's favorite children, I would say that it goes SpaceX, Tesla, xAI, then his 12 actual children, then probably the Boring Company. And that's going to be the one that we're focusing on here today. So, The Boring Company. This is Musk's least talked about company, at least from what I can see. What is it? Well, it is a tunnel digging company. And yes, that probably sounds a little bit weird. But 8 years ago, Elon Musk tweeted out the following. He said, "Traffic is driving me nuts. I'm going to build a tunnel boring machine and just start digging." That was at 8:05 a.m. on December 17th, 2016. So almost 8 years ago at this point, really getting in the holiday spirit and feeling a little aggressive with himself. But he actually went ahead and did it. So we're 8 years later. Let's talk about exactly what has happened since this tweet. In early 2017, the Boring Company was actually formed. So this is a couple weeks following that tweet. And most Wall Street analysts at the time were calling this quote-unquote company, because at the time it was barely a company, more of a publicity stunt. They were saying that this is, a distraction from a bad Q4 for Tesla or whatever it might be. The idea was that it's just a distraction, it's a publicity stunt, it's fake, it's not real, and it made analysts really think that Musk was crazy. And I believe that was even pre-smoking weed on Joe Rogan, so holy shit, they had no idea what they were in for. But Musk wasn't joking around, and it was not just a publicity stunt because they actually went ahead and did it. So by 2018, the company had raised $112.5 million. Now, $100 million of that came from Musk himself, just self-financing the firm, and $12.5 million, older apes might remember this, came from the sale of 20,000 totally not a flamethrowers sold from the Boring Company at a price of $625 each. So they actually sold flamethrowers to fund this thing in addition to the $100 million that Musk was investing in it. I think they made these flamethrowers just because Musk wanted to, and they couldn't justify doing just one, so they had to go and make 20,000, probably to make their P&L back on the developing the manufacturing capacity to actually make these things. That's my personal theory. But with that $112 million in funding, what the Boring Company was able to do was actually build their first proof of concept. So they built their first test tunnel in Hawthorne, California. It's about 1.14 miles long, and it was done at a cost of about $10 million per mile. Now, that is a 99% reduction from the average cost of digging a 1 square mile of tunnel in the United States, which sits close to $1 billion. If you're in places like New York City, LA, then it's going to be closer to about $2 billion in total. And Musk managed to reduce this by 99%, mostly through technical innovation with they developed things like continuous boring, because I guess they had to stop beforehand. But either way, just a much better system. I guess this industry hadn't been innovated on in probably ever since the shovel, maybe. But still, that was kind of the big, that was a big reward with that $112.5 million, was building this proof of concept at a 99% cost reduction to every other tunnel in the United States. So obviously this got them some attention, and by 2019 the company had earned its actual first dollars of revenue, roughly $50 million from the city of Las Vegas to go ahead and build a 1.7 mile tunnel connecting a remote part of the Las Vegas Convention Center to the remainder of the Las Vegas Convention Center campus. So Musk claims that this turned what would have been a 45-minute ride into a 2-minute ride if you go in his tunnels, as opposed to driving on the streets of Las Vegas. Shout out to anybody that's driving on those streets right now, by the way. So they went ahead and did it, and like I said, they did it actually in less than a year as well, which is fucking unbelievable in the United States. But once again, reducing from 45 minutes to just about 2 minutes or so. This innovation allowed the firm to raise an additional $675 million by April of 2022, giving them a post-money valuation of $5.7 billion. Then, by October 2023, nothing really happened in the interim period. The company is working on a bunch of different projects, mostly in Las Vegas, and on their internal technologies and selling those boring machines to other boring companies, not the boring companies, but other tunnel digging companies, I presume. I don't know, maybe fucking train companies or something like that. Who needs boring machines? Either way, by October 2023, employees were able to sell shares in a secondary sale. So their restriction period had ended, and they were able to go ahead and actually earn some cash based on their shares. So in 2023, that sale generated a valuation of about $7 billion based on the price that shares were sold at. So this company went from nothing on December 17th, 2016, really nothing all throughout 2017, to more than $7 billion by 2023. And there's some reporting that it's upwards of $50 billion as of this point. Now, the big reason that people are saying that it's upwards of $50 billion is because the company has allegedly expanded into, not just trying to solve traffic congestion by tunneling underneath the traffic itself. What they've decided to do instead, or additionally, is to do some boring, do some drilling for utility projects as well. So not just consumers, but drilling tunnels for things like water pipes, internet fiber, electric cables, all that different kind of stuff is kind of what they're thinking about. And that dramatically expands the TAM of this company. My big question, though, if there's an urban planner out there listening to this, please shoot me an email and let me know if this is the case. I've seen study after study that says when you add a lane to a highway, you don't actually fix traffic. Arguably, you only make it worse because people know that there's an additional lane on that highway, and so more and more people are going to go to it, and ultimately you end up in the same position. So you can't just add lanes to solve traffic. Isn't this just adding a lane? But instead of it being on the highway, it's just underground. And so, whatever proportion of people would have been on that, or would have been in that new lane on the highway are just going to go underground and you're kind of in the same position once again. I really don't know. An urban planner, please reach out to me and let me know if this is actually the case, and I'll be happy to update everybody tomorrow. But for now, that's about it. Musk now officially controls the space through SpaceX, the roads through Tesla, underground through the Boring Company. Expect, time-traveling boat companies to come online next or something, but that about does it for us here today. Okay, this is a longer one. Jesus Christ, we're going to keep this under 30 minutes. I'm going to go ahead and call it right there. Guys, shoot me an email if anybody has anything interesting to say. David@WallStreetOasis.com. I'd love to see your messages there. But otherwise, I will shut the fuck up now and let you get on with the rest of your day. Thanks for tuning in once again. We love you guys. Happy investing, happy trading, and I'll see you tomorrow. Bye now.